Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Varex Imaging Corporation quarterly report. Varex Imaging Corporation offers a diverse range of products and services across two primary segments, medical and industrial. The medical segment provides an extensive list of X-ray imaging components, including X-ray tubes, digital detectors, ionization chambers, high-voltage connectors, image processing software, 3D reconstruction software, computer-aided diagnostic software, collimators, automatic exposure control devices, generators, and heat exchangers. These products cater to various medical applications such as CT scans, mammography, oncology, cardiac surgery, dental imaging, and other diagnostic radiography uses. In contrast, the industrial segment focuses on designing, developing, manufacturing, selling, and servicing specialized X-ray equipment for security and inspection purposes. This includes Linetron X-ray linear accelerators, non-intrusive cargo inspection systems, X-ray tubes, digital detectors, high-voltage connectors, and coolers. These products are used in applications such as baggage screening at airports, cargo screening at ports and borders, and non-destructive testing, irradiation, and inspection in various industries. The company operates globally, with a presence in North America, Latin America, Europe, the Middle East, India, Africa, Asia, and Australia. Varex Imaging Corporation sells its products through original equipment manufacturers, independent service companies, distributors, and directly to end users. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to remain stagnant over a period of time. The stock price of Varex Imaging Corp has remained relatively unchanged in the past year, a phenomenon that can be attributed to various factors. One possible reason is the lack of significant news or events affecting the company's operations and financials. This could be due to the company's stable performance, which may not be generating enough excitement among investors. Another factor contributing to the stagnant stock price is the absence of any major developments in the medical imaging industry that would impact Varex Imaging Corp's business. The company's products and services may be seen as essential but non-disruptive, leading to a lack of interest from investors who are looking for companies with high growth potential. Additionally, the overall market conditions may also play a role in the stagnant stock price. If the broader market is experiencing volatility, or if there are concerns about the economy, investors may be hesitant to invest in any company, including Varex Imaging Corp. This could lead to a lack of buying pressure and a stable but unchanging stock price. In conclusion, the reasons for Varex Imaging Corp's stagnant stock price over the past year can be attributed to a combination of factors, including the lack of significant news or events, the absence of major developments in the medical imaging industry, and overall market conditions. Varex Imaging Corporation maintains a market capitalization of $1 billion, broadly in line with the industry peer group. Varex Imaging Corporation trades at a lower price-to-book ratio of 1.18 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of various market trends and customer behaviors. On the one hand, revenue growth is primarily driven by an increase in sales to key customers such as Canon Medical Systems Corporation, as well as increased sales of inspection products and digital detectors in the industrial segment. In addition, regional revenue growth has been observed in the Americas region, with a 16% increase from January 3, 2025 to January 2, 2026. Similarly, the EMEA region and United States country have also experienced revenue growth of 7% each during the same period. On the other hand, revenue decline is primarily attributed to decreased sales to OEM customers due to increased competition from in-house manufacturing or external suppliers. Intense competition from smaller competitors in the flat panel detectors industry has also contributed to revenue decline. Furthermore, currency fluctuations and changes in customer procurement decisions due to trade climate have had a negative impact on revenue growth. Other factors such as tariffs and trade wars, supply chain and logistics challenges, cost increases, and geopolitical tensions have also posed potential risks to revenue growth or decline. The company's financial performance has shown significant improvement in recent quarters. Net income has transformed from a loss of $300 million in Q4 2024 to a profit of $2,300 million in Q4 2025, representing a substantial increase of $2,600 million. This turnaround is attributed to several factors. One key reason for the improved net income is the decrease in inventory write-downs and losses from equity method investments. Specifically, inventory write-downs decreased from $1.1 million to $0.5 million, while losses from equity method investments dropped from $3.2 million to $1.7 million. These reductions have contributed positively to the company's bottom line. However, profit margins have not followed the same upward trend as net income. In Q4 2026, gross profit margin decreased slightly to 33.3% from 34.2% in Q4 2025, while operating profit margin increased to 7.4% from 5.6% in Q4 2025. The decline in gross profit margin can be attributed to various external factors such as tariffs, trade wars, supply chain disruptions, inflation, and exchange rate volatility, which have had a negative impact on the company's profitability. Despite these challenges, the company has managed to improve its operating profit margin, indicating that it is becoming more efficient in managing its costs. Overall, the company's financial performance has shown significant improvement, driven by a combination of internal factors such as reduced inventory write-downs and losses from equity method investments, and external factors such as improved operational efficiency. The company's financial performance indicates a concerning trend regarding its operating cash flow. For the year 2026, the company reported a significant negative operating cash flow of -$16.1 million. This is a stark contrast to the previous period, where net cash used in operating activities increased by $7.4 million for the 3 months ended January 2, 2026. The data clearly shows that the company's operating cash flow has been consistently negative, with no signs of improvement. This raises concerns about the company's ability to generate sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. The negative operating cash flow is a red flag for investors and stakeholders, indicating potential difficulties in sustaining business operations and achieving long-term financial stability. The company's debt level and interest expenses have undergone some fluctuations over time. Initially, on page 4, total liabilities decreased slightly from $620.8 million to $607.2 million. However, this trend was not consistent as seen on page 22, where total debt outstanding net has actually increased by a small margin from $367.5 million to $367.6 million. On the other hand, interest expenses have remained relatively stable. On page 2 and page 36, it is noted that interest expense was flat at around $-7.9 million in both years. However, on page 22, there is a slight increase in contractual interest coupon and other from $7,100,000 to $7,400,000. A significant change has been observed in the senior secured notes, which increased from $300 million to $368 million, as noted on page 23. Furthermore, total combined indebtedness as of January 2, 2026 was $369.7 million, indicating a substantial increase since the previous period as mentioned on page 52. Management is emphasizing a dual approach to the company's outlook and strategy. In the short term, they are focusing on managing cash flow and liquidity through various financing activities, anticipating future demand, and increasing inventory accordingly. This indicates that management is prioritizing financial stability and adaptability in response to changing market conditions. In the long term, management is committed to investing in research and development to support growth, expanding internationally, and becoming a partner of choice for new systems and replacement components. They are also focusing on customer relationships through pricing agreements with customers spanning multi-year periods. This suggests that management is prioritizing innovation, expansion, and strategic partnerships to drive long-term growth. However, management is also aware of the challenges and risks facing the company, including decreased sales due to OEM customers manufacturing components in-house, intense competition from smaller competitors, and global economic instability. To mitigate these risks, management is investing in property, plant, and equipment to support growth, but acknowledges that significant resources will be required for international expansion. Overall, management strategy balances short-term financial stability with long-term growth initiatives, while also acknowledging the need to navigate various challenges and risks. Concerns about inventory buildup and supply chain disruption. The extracted summaries reveal a growing concern about inventory buildup and supply chain disruption. On page 10, an increase in inventory write-downs indicates potential issues with managing stock levels. Similarly, on page 12, the summary highlights the risk of inventory buildup due to restricted cash flow and supplier disruptions. Further analysis reveals that inventory purchased from DPI-X increased significantly in January 2026 compared to the previous year, page 18. This trend is also reflected in work-in-process inventory, which decreased while production levels remained steady, page 30, suggesting potential issues with supply chain management. Supply chain disruptions are a major concern, with delayed product delivery and increased costs reported on page 31. Trade uncertainty, tariffs, inflation, and supply chain disruption all contribute to concerns about inventory buildup, page 32. The use of cash for inventories was higher in the 3 months ended January 2, 2026, indicating potential issues with inventory management, page 38. The impact of these disruptions is evident in lower gross margins due to increased costs and prices resulting from tariffs on imported materials, page 41. Excess inventory has also become a concern due to changes in customer purchasing forecasts, potential slowdowns in sales, difficulty predicting demand or delivery schedules for products, page 42. That concludes the financial summary for Varex Imaging Corporation. Feel free to comment below, and I will be happy to answer them when possible.